Hello, everyone. Thanks for joining me today. I'm going to be covering the SweepCast Unusual Options Activity platform, which is geared for retail traders such as you or I. I'm going to go through the platform and all of its features step by step. So this video may be around 10 to 15 minutes long, and we will probably have more parts to this as well. But let's get right to it. So this is the SweepCast platform that you will see. Currently, you're on the home page, which is the main dashboard. This dashboard has all of the unusual options activity that you'll see. On the left-hand side here at the top, you can go ahead and select dates. So if you select a different date, it will take you back to activity that occurred on Thursday. It may take a second to load, so give it a little bit of time. We'll switch right back to Friday, the 25th of March. If you want to look at a date range, so you want to look at 2 days or 3 days together, you can select the 2 days here, Thursday and Friday together, if you're trying to look for activity and combine the activity together when you're doing searches here. So I'm going to take that off, and we're going to go right back to the 25th. The second option that we have here is hide expired. And the way this works is these expired 2 days ago. This call for Marvel, MRVL, which was a call, bearish sentiment, expired 2 days. We want to just get rid of all those. This will just remove all of them. So you see no expired activity. This is very useful technically for when you're looking at historical data more than anything. So that's the feature there. The second one is if you want to only see items from your watch list here, you can click this toggle and it will just show you options. So now I only have Tesla, BABA, and NVIDIA. These are on my actual watch list. So it's just going to filter to all of the items on my watch list. And you can use your mouse wheel to scroll up and down, or you can use your your arrows on your keyboard to go up and down. So I use the mouse wheel to go up and down. It's a lot easier. So if that's what you prefer. The next one is ETFs. This will turn on all ETFs. So SPY, SPY, QQQ, IWM, JETS, all of those ETFs, it will filter and unfilter them. So when it's off, it is removing them. When it's on, it's showing them on the dashboard. The other feature on this top, the last one, is export to a CSV file. So everything you're seeing here, if you have a date range filtered, or if you have your watch list on, if you have a high expired on, whatever you do, whatever has been preset, when you click this button, it will export it to an Excel file for you. So that's a really cool feature. You could do this 10 times a day. It used to be 3 times a day, but now you can do it 10 times a day. So that covers the entire top row of the actual dashboard page. When we move down, you will see this filter button. So if I click on the filter button, it will populate all of the filters available here for me. So we have ticker, we have type, we have call or put, we have the sentiment, sweep score, volumes, and open interest. We have strike prices, we have expiration dates, and then we have premium levels. So total amount of contracts traded. So the cost of those contracts. So those are all the features that you have. Filters you have, and you can filter these. There's not going to be anything usually below 10,000 that we see. Primarily, everything starts at 25,000. So 10 to 50K, 50 to 100K, 100 to 200K, etc. You kind of get the point there. So that's how you use the filters. In terms of adding items to your watch list, so a stock that's not on our watch list here is, Planet Fitness. So just go ahead and type it in and hit enter, and it will show up right here. And then for Friday, this is a neat feature. So whatever items you have in your watch list, instead of having to type for them, if you want to see where the sentiment is going, if it's bullish or bearish, you can go ahead and just hover over and take a look. For Apple, about 50% bullish, 39% bearish, and then the remaining 11% was neutral. You can also click into it. So it looks like Planet has 100% bullish. I'm going to click into it, and it does look like there was a lot of buyers for calls about a year out. This is actually pretty nice to look at. I like going for these types of trades where there's repeat buyers coming in for the same strike price, and they continuously just keep hitting the ask, or in this case, they're hitting the asking price. So this is pretty nice to look at. And the stock was trading early on at $85. I think it ended around $85. So stock didn't move much, but this is about a year out. So this is something that maybe you want to look into yourself when you see things like that. So I clear the filters. We'll go right back to this. On the top, you'll see the put to call ratio, total puts, total calls, and then the sentiment. I do have a guide on sentiment. I just want to be very clear on sentiment. People get confused. How can a call be bearish? Well, a call can be bearish sentiment because the call is the trade itself. That's what's being traded. It's a call. But an objective of a call can lead to two scenarios. You can do a bearish trade on a call, or you can do a bullish trade on a call. Primarily, most startup or people who start up trading options, they only know that calls means going up, means bullish. They don't understand that calls also can mean a bearish position. Where you can see a bearish position in a call is if you go and sell or write the call to somebody else. So you're bearish, you're giving away those calls. You're writing those. You're saying, here, you could have the $100 call on Airbnb. You could have the $170 call, $200 call on Airbnb. I don't want it. I don't think it's going to go up. And you know what? If it does go up, I'll own it. I owe you those shares then, as a call writer. So that's the difference. When a call is bearish, it is being sold. It is being written. That means that person who took the position has a sentiment that is bearish. And the way we know this, the only way we know this, and it's only possible, let me make it very clear, it is only possible in the options market. And that is why options and unusual options are very, very important, is because in the options market, you can get very clear understanding of the price of the trade. And this is very important. So the price of the trade tells you the intentions of the person making the trade. The trade can be either at the bid, it can be at the mid, or it can be at the ask. It can also be below the bid, and it can be above the ask. It is literally, that is the gold mine, right? That's something that is giving you very, very clear insights on what is happening. This is a very easy method of thinking about it if that is a little confusing. When you go and look at a house and there's multiple people offering on this house, they want to buy the house. Well, if the house was selling for $300,000, the seller listed it for $300,000, and a buyer comes in and they're going to offer above the $300,000 asking price, and let's say they offer $310,000. Well, that is called an above the ask offer. They are willing to buy it for more than what is being asked for. Well, what is that buyer's intention? They obviously want the house really bad. They have some knowledge of this. They love the house. They're putting their money where their mouth is, and they're paying above the asking price, and they're getting in there as soon as possible. That's the same thing on these things in the options market, where you can figure out, is it above the ask? And if it is, then more than likely they're very, very bullish. So here's an example. There's a stock, FAS here. This stock here, and this is actually not a stock, it's actually Directional Financial Bulls. It's an ETF, it's a leverage ETF. It looks like there was a bullish trade on it that was above the ask. You guys can read it there. It says $140 call sweep above the ask. They paid more than what was being asked for at this point in time. Same thing with Uber here. Uber here has a call. The price on this call, the price it was trading at was $34.42. They came in and bought the April 8th, so about a week out from now. They bought the $40. They bought the $40. So out of the money, they bought those calls, and they paid above the asking price. And in total, what they paid for this was $40,000 because they got 2,392 contracts for only 17 cents. So this is This is definitely a YOLO call, I would, in my opinion, but usually retail traders are not doing these types of trades. It's just rare to see it. So more than likely, these are large institutional traders, and these are funds or institutions that have more knowledge about the market or some information that you or I do not have. And that's the advantage of getting this information. And the biggest advantage of getting this information is not getting it a week later or 2 days later when somebody talks about it or posts it, is to have direct access to the real-time information, as close to real time as you can get it within 60 seconds or whatever it may be to process all this data. You're getting this information so you can take action on it ahead of others. So you don't hear about it on StockTwits 2 days later or on Twitter or Instagram a week later after the move has happened already. This is how retail traders are taking advantage of the market and evening the playing field. You got to even the playing field. You got to put the odds in your favor. And that's what SweepCast allows you to do. So probably went on a little bit of a tangent there. I just want to cover the other main parts of this. There's a place called FlowCast, a little tab here. FlowCast is very useful, guys. I use it early morning, but it lets you see, if you want to just filter the sweeps, it lets you see all of the activity, the top, bullish, and bearish. This is very useful probably in the first 30 to 60 minutes of the market opening. So you can see some large orders and see if there's movements happening. After the day goes on, it's going to primarily you're going to start to see a trend when you look at this day over day. Tesla, Apple, Nvidia, some of those are larger names, so they always have a lot of flow going on. But then you will find things that are a little bit more out of the ordinary, like NEU, Palo Alto Network, Shop. These usually don't show up. Wells Fargo, they usually don't show up here. So this can help give some insights on that as well. And you can do the same thing here. You can go look at a specific history, or you can go look at a date range. So you could do both of those things on there. And then the third piece here is earnings. So earnings are going to be any flow that is for the day. So this will not work on the weekends, but let's say tomorrow we look at this for the 28th. So earnings that are coming on the 28th, if we go looking for these earnings, it will bring back all the earnings that are going to come before and after the market. So Dave & Buster's is one. And it gives you the expected revenue, expected EPS, and then when it reports, it will bring it here. But tomorrow, if you come in this platform, then you can just, instead of having to type in each one of the earnings, you can just click in here, and then you can see what the calls and puts are coming and all the details of the flow. So this just makes it much, much simpler and much quicker and more effective for you to look at earnings flow. So that's the purpose of that tab in itself. So I'm going to flip right back over to the homepage. And I'm just going to go through one of these lines so you guys understand what all of this means. So on the left side here, you're going to see view chart. So you can actually click on here and it's going to pop open a modal that will bring and open up a chart. And you guys can do things on this chart as much as you want as well. So this is just a trading view integration. And then you can also bring in other things. You can bring in indicators here as well. So you can look at things, you can take a picture, whatever you want to do, you can do that in here. So you don't actually have to leave the platform and just click away. If you don't want to be in here, just click out and then it will disappear for you. So I'm going to go ahead and look at this here. We're going to go through Amazon for a second. You'll see this green symbol. It'll be green, red, or in between. So what this tells you, it's a repeat call. So this tells us that the $3,400 strike price on 4/1, April 1st, for Amazon as a call has been bought over and over and over. It's repeated 8 times. And repeated activity also is a very telling sign when somebody continues to hit the ask over and over and over throughout the day, especially when the price is increasing, but they continue to hit it over and over. This is very, very good information for you to know. So you can click on this button and it will bring you to all of those trades from Amazon and you can start to narrow it down yourself. So while we're here in Amazon, we'll go through here. Now we have a sweep and we have a put. A sweep, the reason why we're even called SweepCast is because sweeps are probably a lot more aggressive. And what the difference of a sweep and why they're called a sweep. So when you go and do an order through Robinhood, like most retail traders, or you do an order through Webull, what they do is they go and essentially you're doing a market order, and I'm not talking about the price. I'm talking about how is your order being filled. You're going to essentially what the best route is. So there's routing right within these orders that are going in the options market. So when you click buy and you put a limit order or a market order, it doesn't make a difference. Through Robinhood, they're going to go and find essentially the most optimal price they can for you for this exact option. And they're going to fill it through a certain routing or a certain route. So there's routes like Ajax, there's Arca, there's many different routes available. There's probably 15 different routing, interchanges available. So when a sweep order comes in, professional traders do not usually do sweep orders. Because of fees and other things, to get the best price, they're going through Arca, they're going to Ajax, they're going through one of these, exchanges. They're going directly, they're direct routing into it. So when a sweep order comes in, though, that is actually an order that doesn't care about any of the particular routes it's going to take to get filled. It's going to go through all of the routes. It will go through all of the exchanges, and it will go and fill the order as fast as it can. And that is a very telling sign, because a professional hedge fund or institutional trader is going to route their order if they are not in a rush to get it. They're going to route the order. That is why sweeps are very, very important. It is taking all the liquidity out from all of the exchanges as fast as it can. So that's a sweep. A trade, on the other hand, is not that. It's the essentially somewhat of the opposite. It is just a large order that is being done, but it's not being used through multiple sweeps, or is not being filled through multiple exchanges. Sorry. So the next one is call and put. You guys probably already know this. Call, in most cases, you want to have the stock go up if you're buying it. A put, you want the stock to go down. It really just gives you the right to buy the shares at a certain price or sell the shares at a certain price if you're buying it a put. So that's pretty easy to explain. The sentiment. So the sentiment, once again, the sentiment, if the price of the trade on a call is at or above the ask or close to the ask, it will be bullish, because that means the person was willing to pay a higher price for this call. So they want to get into the call. So we can assume that their stance is bullish. On the other hand, if it is at the bid or below the bid or near the bid, that means they just sold it right away. They just got rid of it, or they wrote the call. They got rid of it. So whoever was saying, hey, I'm going to buy it for $2, they said, all right, here you go. Take the call for $2. We don't care. Actually, take the call for $1.90. I don't care. I don't want it. When that happens, why would somebody give away the call for the bid price? Right? Like that. So go back to the situation of somebody buying a house. If the seller was asking for $300,000, a bid comes in at $280, and the seller's like, oh yeah, sure, go ahead and take it for $280. Well, the seller really wanted, the seller in this situation wanted to get rid of the house. They gave it to the buyer for $280,000. That doesn't usually happen unless there's a reason behind it. The seller in their mindset says, oh, the housing market is going to crash, or this house really isn't worth this much, or the railroad next to the door is shaking the house every day and there's airplanes flying. The house really isn't worth that much, right? They know something more than the buyer does. So that's the reason why it can get sold at the bid. And then in terms of a put is bearish when the put buyer is paying at or near or above the asking price, right? If you go and want to get a put and you think GameStop's going to go down a lot now because it went to $150 just recently, and you think it's going to go back to 100, and you're buying puts at $100, and you go and just do a market order and say, I'm going to pay the asking price. Well, you want the price, you want the stock to go down. Your stance is that it is bearish. On the other hand, the same situation, right? If a put is bullish, that would mean that somebody is selling the puts because they don't think the price is going to reach. So if I'm bullish on GameStop, I'll go sell a $100 put to you because I think the stock is not going to go back to 100, and I think you're wasting your money buying the put. It's going to expire worthless. So that's how I would know that if I'm selling it, if I'm getting rid of it, and I'm saying, here, take it. You say you'll pay $2 for it. I'm not even going to ask for more than $2. I'm just going to give it to you. I'm just going to write it. I'm going to fill your order in right away. Well, then that means I'm actually pretty bullish. I think those puts are worthless. And that's the reason why you're going to see things like this, where this put is bullish and it says at the bid. So that's how you get to know some information like that. So we're going to go through one more thing here. I'm going to go through, well, actually a few more things. Sorry. I'm going to skip a few items because it may take too long to cover it. But one thing I do like looking at is, these sweep scores. And this sweep score is really letting you know the power of the trade. How aggressive was the trade? Was it a full sweep score, which means it was at or above the ask? And if it's a light blue sweep score, it is going to be above the ask. These are highly, highly aggressive orders. So just keep that in mind, that these are very, very aggressive orders, guys. So that's sweep score, and there's more information about that as well. Strike price, you probably know about this. The out and in, it just means was it in the money or out of the money, right? If you don't understand what in the money and out of the money is, just do a Google search, and it'll explain it to you. But here's an easy way to understand this. For Cisco, the price here was almost $54.87 when this trade occurred. This put was for $50. Well, the price is above $50, so the put is out of the money at this point. If it was a call, it would be in the money. This is the expiration date, and then this is the total premium. And then this lets you know there was 2,000 contracts traded at $2.63, and that gets you the total to the premium amount. So hopefully that helps answer a lot of questions, and hopefully I made some sense. And if you guys have any more questions, I'm going to continue making a series of videos on SweepCast for you guys to help get better understanding on this platform. Please leave comments below, and I will cover certain things for you. And I'll cover some tips and tricks on another video of what I look for, because there is a lot of activity. I mean, there's millions of orders happening. This is at least filtering it down to a digestible amount, but even then it's still a lot. But there are tips and tricks. You need to start using some of the filters when you're looking at some of these things, and you want to start looking at things that are out of the ordinary. Don't focus on Tesla, don't focus on Amazon, SPY, focus on the smaller tickers, because usually that's where the hidden gems are. So that's a little tip that you guys can possibly use when you guys move forward. And if you haven't used SweepCast, sign up, start the trial, give it a shot, and join the Discord room as well. There's hundreds of people that can help you out, and I'm in there as well. So have a great day, everyone. Thanks a lot.